Hey guys, this is Dave with Moniology. Hope everyone is having a great weekend. This is the weekend market review for October 21st and 22nd, 2017, where we look at some of the daily, weekly, and monthly charts of some of the most important sectors in the market to try to get a sense of the pulse of the market and find some of the areas where we want to invest and some of the areas we definitely want to avoid. So let's have a look at what we've got in store this week. So starting off with the 10-year Treasury Yield on the daily chart, this one is starting to find its legs again, and looks like yields are going to break this 24 mark on the TNX, and it looks like they want to start targeting 26. Why are we confident on this? Well, look at the weekly chart. The 10-year weekly suggested that we've got this bullish flag breakout. We had a very nice breakout followed by a retest, and now we had a nice hammer pattern this week, and looks like we're about to break higher here as the MACDs continue to break above zero and build very strong momentum. That suggests inflation is here, and it's definitely coming on strong. Monthly chart, we're starting to break above that bullish flag on the monthly. That's a very, very big development as the monthly MACDs start to roll back higher, in our opinion. This suggests that this particular index is likely headed to 30 on the monthly at a minimum. So yields are definitely going higher. Fixed income investors, you're going to be in a little bit of pain in the short run. Taking a look at gold. Gold is interesting on the daily. It's been in a corrective pattern. We mentioned last week that we wouldn't be surprised that upon this retest of the 50 on the daily RSI, we'd have a bit of a pullback. We've seen that so far, and now we're kind of hitting, we're kind of retesting this gap fill of the 1280 zone. It's possible we might go just a little bit lower, but we think that this corrective pattern is coming to an end, and we might see a resumption of this pattern to the upside. Let's take a look at what the weekly gold pattern suggests. Weekly suggests we might actually retest this breakout from the upside. So potential move towards 1250 is a possibility. Bulls want to see this 50 on the weekly RSI hold, and if it doesn't, we might see some additional downside or perhaps some additional consolidation for a couple of weeks here, which is okay. So long as this uptrend this trend line holds from the upside, that suggests that we're in a very strong pattern in the gold market in the long run. Gold monthly, here again we had this very nice breakout from the downtrend that we started in 2011, from the uptrend that basically began in 2001, and this takes some time to develop and find legs. We broke out above the monthly, above the 50 on the monthly RSI. Now we're testing it from the upside rather, and we think that this is going to hold. It might take a couple more months to do so, but once this turns to the upside, that's our confirmation that that's when you want to go long, and that's when you want to start buying up the miners as much as possible, and you want to be making a watch list as we speak because there are a lot of good opportunities there. Taking a look at the junk bond ETF, nothing to see here, still in an uptrend. Potential divergence here on the daily where we're at a basically all-time high in price, or certainly on this time frame, yet the RSI is not confirming that breakout, but nothing really to see here. So same thing here, we broke out of this broke down from this bearish wedge. Now we're creating another wedge here with continued negative divergence, suggests, and on smaller volume, you might add. So I have just a gut feeling that things are starting to kind of taper off in momentum, and eventually we're going to see a rollover of this particular credit index. And on the monthly chart, still bullish. Nothing to see, but again, pointing at the lower volume as we make new highs, and the MACDs are starting to curl to the downside. So one thing to keep an eye out for. Taking a look at the crude oil contract on the daily chart, this looks bullish. We made a video several weeks ago where we challenged the great legend Peter Brandt and challenged his view that oil was headed lower. We think it's headed higher based on our charting patterns. And we think that a break above 53 is coming very, very soon, and it's going to make a run towards 60 as a first major target. Why do we say that? Well, look at the weekly chart. We've been in a basically 2-year base here between 45, 42, and about 55. Now we're moving higher, and we're building momentum on the RSI. We're firmly above the 50 here, and MACDs are at multi-year highs here, which is a very positive development. So you want to see 55 break if you're a bull, and if that happens, likely next target is about 60 to 63 level. But a lot of good opportunities in the energy sector, and most importantly is the monthly chart. We're on the verge of breaking out on the monthly above 50 on the monthly RSI. When that happens, some of the biggest moves do occur, and so wouldn't be surprised if this week or next we would see a 5 to 10% move in crude oil if should this break, and this would confirm an inverse head and shoulders that's been developing over the last couple of years, and that would confirm potentially a start of a rise towards about 80 in crude oil. So a lot of really interesting opportunities if that should happen. Nasdaq is breaking to new highs, but it's kind of diverging on the daily, so something to point out. You've got the MACDs now basically curling below zero, so pullback is I would say highly probable based on that chart alone. The weekly, Nasdaq weekly, breaking to new highs, but negatively diverging in terms of RSI, but it is above 70, so you want the level you want to see hold if you're a bull is 63.53 or 63.50 approximately. If that level doesn't hold, then you might see some additional pullback. On the chart, Nasdaq monthly looks very, very strong, but we did break down from this bearish wedge, and while we're testing it from the upside, there is a little bit of divergence here, and sometimes that takes literally months to resolve itself, but we think that it's going to resolve to the downside, and we are approaching a correction in the market, which may happen in the next couple of months, so good luck trading on that one. Anyway, Russell 2000 daily, well, he had a period of consolidation here. It was the weakest index in terms of equities, weakest major index for a couple of weeks, and then kind of consolidated as it corrected its overbought condition, and it looks like it might want to start heading back higher. If that happens, then it's likely going to lead the markets upward, and we should see higher prices. But no surprise that it found support on the Bollinger Band here. Next on the list is the weekly of the Russell 2000, and again it looks very strong. It looks like it wants to make a run towards 1550. So if you're a futures trader in this contract, it's not a bad place to be, and the monthly looks very strong. S&P looks very, very strong, strongest of the indices, I would say, on the daily. Taking a look at the weekly, looks great. S&P monthly looks fantastic. If you're a trend follower, this is an index you definitely want to stay long. Tips to 20-year Treasury bonds. This is the index that tracks inflation, and it's starting to break higher again. That doesn't surprise us because the TNX index that we looked at initially was showing the same sort of formations. When you look at the weekly, it was kind of this cup and handle right here pattern that we're breaking out of to the upside. So that suggests that inflation is here. And finally, on the monthly chart, we're starting to break out again on this flag pattern, and that's very, very bullish for bond yield bulls. The all-important dollar index. Dollar looks like it wants to make a run towards that 95 to 96 level, probably shake out some shorts as it breaks above this 200 EMA. On the weekly, rather on the daily, and a lot of folks might say that the new dollar bull is coming, but we think that this is just a bounce to test that 50 RSI point, at which it probably breaks. We think that it's probably going to break down and ultimately roll back over. Why do we say that? Well, take a look at the monthly. And the monthly had a massive breakdown, and this doesn't just bounce in a V-shaped pattern so simply. It's probably going to make a little bit of a move again towards the 50 RSI, and if it can't recapture that, likely heads lowered towards the 87.50 level, which is probably the high probability area where it finds some longer term support. The volatility index, there's some momentum, rather stair step pattern momentum being built to the upside on the VIX. So this is not a bad area to go long on the VIX. The VIX weekly is showing some consolidation and some building some nice basing on the RSI, and this is suggesting that we might have a nice move to the upside on the VIX in the short term. And the monthly, while it's still very weak, it's starting to show some legs here, a little bit of strength. So suggests that some corrective action in the markets is definitely in the cards. Finally, the world index. Interesting. So we had a little bit of divergence here where we made new highs but didn't confirm on RSI. Now we're kind of rolling over here on the world index daily. We pointed out over the last couple of weeks that the world index has kind of created some negative divergence as we were making new highs, so something to look out for. If it breaks below this middle Bollinger Band, that might suggest that the global markets are definitely starting to pull back. And taking a look at the monthly, the monthly looks very good, but at the same time, there's that 2000 level is very strong resistance. So a pullback towards 1900, possibly towards 1770 area, which is the monthly middle Bollinger Band, wouldn't surprise us one bit to shake out some of the most recent entrants into the space. Bottom line, guys, oil looks very strong. Interest rates look very good. Gold is consolidating. The markets might be setting up for a bit of a pullback, but overall the equity markets look pretty strong. And that's about it for this weekly review. Good luck with your trading. Please do follow us at Moniology at StockTwits and on Twitter. Subscribe to our videos on YouTube, and feel free to support our work on Patreon. You'll find a link below. It's kind of like a Kickstarter for artists, and we could really use your support to make better videos more often. Thanks, guys, and have a wonderful week.